Traders, welcome to this training. In this lesson, I'm going to walk you through two different ways that you can look to identify trading signals as part of the Trader Ascension program and our SR Specialist program. So I'm going to show you what type of action we look to take at specific levels and a couple of the ways that we arrive at defining those levels. Also, be sure to stick around at the second half of this. I'm going to take a look at signals for the upcoming several days in the market. So we're starting off with the GBPUSD. I'm on a 2-hour time frame. We're in Trading View, and I'm going to click on the replay button. On the chart, I've got a modified relative strength indicator, and then I've got a modified trend ID indicator at the bottom that we use to help us quantify entry signals. So in other words, the whole goal here is to remove the emotions, to remove the subjectivity, and approach these markets with rules-based trading and be completely objective about when and where to enter. One of our support and resistance zones right here was broken. So one of the things that we always teach is to come into the markets with an idea about where we want to be long or be short. That way we are patient and we follow rules rather than just going to the market and saying, okay, do I find a reason that I can get into the markets? Remember, when you ask that question, it's likely you're going to get a yes, because most traders want to trade. However, successful traders tend to be incredibly disciplined. So they'll come to the markets and say, do I have a qualified signal? And the answer to that question is either yes or no. If you have a qualified signal, enter the market, follow the rules, place your stops and your profit targets. If you do not have a qualified signal, then keep your capital safe and on the sidelines. So right here, there are two ways that we take action at this level. So as you see upcoming sessions, I'm going to offer a key resistance, or what we call the offer zone. And typically on the offer zone, like we see right here, I'm going to look at selling a portion, half of the position at the bottom of the offer zone. So in this case, it'd be 125.20 pound dollar. Sell the other half about 60% into that zone around 125.30. I'll put out where the protective stop would be for the system, and then where target 1 would be hit and where target 2 would be hit. And what's most common is the scalping contract, or the first half of the position, is typically going to be 1 times the risk, or a 1-hour trade. So if we're risking 70 pips, the reward will be 70. And then the second half of the trade, we call the trader, will typically be a 3-hour trade. If we're risking 70, then the reward will be 210, or 3 times that 70 pips. So as price rallies into this, the more aggressive style is to go ahead and just place sell limit orders in the market. We're going to reference those here, a sell limit here, and then we'll use a 70 pip risk versus a 70 pip reward. And then the second one would be here, and this one will use about 60 pips risk, and we'll look for reward down to the current swing lows. So you'll see right there that represents about 190 pips of opportunity. Now, again, the beautiful part about trading these higher time frames with the SR Specialist system is it allows us to predetermine the amount of risk versus reward. Number 2, it allows us to lay limit orders in the market. You don't have to be in front of the chart all day long. And a lot of you have emailed and commented in different sections saying you can't be in front of the screen the whole time. So being able to set a limit order here, attaching your protective stop here, and then attaching your profit target here allows you to participate in these markets and take advantage of these beautiful trades without having to be in front of the screen. It gives you that freedom that you're looking for. So let's watch how this price moved into this zone. We're updating right here on a bar by bar basis. Again, this is a 2-hour chart. Now, at this point right here, the part of the position that is down here at the 125.18.19 area would be short. And at this point right here, the part, now again, that was a spike. Let's see if we get the next signal in. And right there, the second half of the position would be short. So at this point, you'll hear in the videos, you'll hear in the updates that the CURPOS, and that's short language for current position, we would be short 2. And again, your position sizing is going to vary based on your account size and based on your risk tolerance. But one of those, we're just going to say we're risking 70 to make 70, so we call that 70 by 70. And then one of those would be, in this case, it's going to be closer to 50 because we got short higher in the market, and then we're going to take that times the 180 target right there. So 50 by 180 as an example. Yeah, so quick answer. So if we're selling here and we're going to risk 70, as we go up here, we entered the market 20 pips better or higher, and thus we don't have to have the full 70 pips at risk. Yeah, we want to make sure that our protective stops are above prior swings in the market. So right here from the 25.20, a 70 pip risk would be here. And then as we get short up here, 25.35, let's say, protective stops would be above the 126. Okay, once we hit this area, now let's see how this price rolls over. We're on a 2-hour time frame. So from the short entry right here, you'll see we pull down, we come close to our profit target 1, don't quite hit it. Okay, let's go here, and then right there, profit target 1 has been attained. So from the point of entry right here, target 1's been attained, and you've got 70 pips in the bank. Now at that point, there will be an update that'll come out, and the update will discuss the profit target if there's an update and the protective stops. So typically any protective stop that was here is going to trail down. I still like to leave them above swings until we take out a swing low right here. So you'll note we came down and that candle right there tested that prior candle. Again, look left, structure leaves clues. Here we clearly broke below it on the 2-hour candle, but a pretty significant bullish hammer reversal candle right there. Now I want you to note what's going on at the bottom of the chart as well. This is a huge guideline. See that black at the bottom? That black band right there was the qualified sell signal. Note also RS drops below the signal line. So this relative strength is double smoothed, and then we built an EMA of that, and that's what produces the signal line. So for those of you that don't want to be short here, in other words, have your sell limit resting, then this would be the qualified sell. You just sell the open of the next bar at market. All right, now RS right here just made a new low. You see that we're solid bearish right here. So let's continue. And then right here we finally do get the lower low, lower close. Now we've got an opportunity to trail that protective stop and start to lock in profits and reduce our exposure. So at this point, 125.47 on the protective stop. Market drops down, pop back up. Now I want to see another lower low, lower close. There's the new structure low, lower close. And you can see that very next candle. So protective stops during this trade came down to 124.72. We left them right above that swing high, and then as price just moved sideways here, which took about a day and a half, once we got the lower low, lower close, the stops came down aggressively right here to 123.80, locking in 2/3 of the potential profit, and then you can see we eventually hit that extended target right there. So two position traders came in and came at the 70 pips on the first target, about 150 to 180 on the second, so well over 200 pips trading a full unit. Okay, now this chart also represents a beautiful opportunity to see one of our primary turning point signals. You'll note here relative strength drops below 20. Now that we're at that extreme oversold condition, we're starting to look for a potential turn. Also note right here, for those of you that are more aggressive, we came down and we put in this beautiful sell with trend. I cover that in a more detailed video in your members area. We went from a swing high to a new structure low, beautiful sell signal right there that immediately paid dividends. And again, you can see right here, we popped back up, and then on this candle right there, had the qualified sell signal, RS dropped below, would have produced a short entry at the 123.70s. And then we made an immediate press right there for 120 pips. All right, now let's continue the replay. Now look at this beautiful symmetrical double bottom. And again, gang, you're going to see this almost on a weekly basis. Members, this is in your course, but this powerful pattern, a double top, double bottom, is all over the markets all the time. All markets, all time frame. It's a beautiful area to identify a key support zone, and also it tends to signal a reversal, or what I call an end of move. Okay, so obviously a reversal would mean a reversal from the current trend. So if we're reversing from bear, then it's likely that we're going to see a bull move. Or again, in this case, the DB double bottom could signal an end of move. So in this case, the move has been bearish. If it's the end of that move, it could be the start of a bull move. Now, the other thing I want you to notice here is that this is counter trend. So you'll note on the chart, the big Mo right here, big momentum, is bearish. So price came back up to the big Mo. We talked about our qualified sell signal, took a beautiful profit, another sell signal here, beautiful profit. So that double bottom occurs in a counter trend move. These are more aggressive when they occur down here. Now, one of the keys here is I've got a doji on the right side of the double bottom with a higher close. So this would be a beautiful qualified entry. This is in the advanced training for you. The key here is going to be this prior swing high. Right now it comes in at 123.19. So I want to see price trade above and close above that level right here. Then what tends to happen is typically we'll go make this new structure high, higher close, followed by a pullback here. And then if this swing low holds, we'll press right there, and that typically confirms now your trend reversal. All right, so let's continue the playback. Look at that. Beautiful directional move. So again, those of you that are counter trend traders, you would have been long from this area, 122.81, with your initial target and a retest of previous market structure, that swing. That produces 95 pips right there. And now let's see if we do get that retracement. Look at that move. Beautiful directional move. So this thing went further than we originally anticipated, and the retracement was shallow. What's that? That's a sign that there is good strength behind that directional move. Okay, so now let's just recap what we just covered. We identified a key SR level. In this case, we'll call it an offer zone. Okay, in your updates right there, in your SR specialist, I called out a sell signal right there. Short entry. Produced the short right here. Target 1 was attained, target 2 was attained, and then as we broke below structure support, we made a new structure low, lower, high. This was a trend trade. Called that out as aggressive. Another winner, winner, chicken dinner. So about 350 pips available there as we were closing out that month. Then this trade terminated in, or an end of move pattern formed. Let's get rid of this and this. And we produced a beautiful symmetrical double bottom. Those of you that are aggressive got long at or near this 122.90 to 123 handle, took your immediate profit right here, and then if you stayed long, participated in that directional move as we went to new structure highs. So this is a great example of being dynamic. So when you're a dynamic structure trader, you're trading the markets with the base theory that I call IPDE. So we first have to identify the current conditions of the market. Okay, right here we were sellers with the underlying trend. Price had just traded below the big Mo, made new structure lows. We're looking for the first time back to get short. At this time here, we came back down and we retested the previous structure support zone. Okay, now we broke below, closed below, then we look for the qualified sell there. After we saw the symmetrical double bottom with that extreme RSI oversold, we predict this double bottom could produce a change of trend. Now again, if I'm aggressive, okay, it's an aggressive and it's a counter trend trade on the long entry. Okay, identify, predict, decide is the D portion, decide which trade signal to use, and then execute with consistency and repetition. So if I'm aggressive, I decide that I want to trade the double bottom, then I execute the rules of engagement of that double bottom. Okay, now let's watch this. We'll go ahead and close this down. Now let's start to look at current market conditions. I'm going to go back out to a higher time frame so we can identify some key levels for these upcoming next couple of days in the market. Okay, so we're in the GBPUSD. We're on a 2-hour chart. Let's come back to our 4-hour. You see that we had a beautiful directional move. So we traded above, closed above. We issued the buy signal right here that gave us a great trend continuation trade. We made new structure highs. Now I'm going to come over here. Now we have this level right here that held. So we've got a key resistance zone right there, 126.80s. We've produced a 4-hour symmetrical double top. I'll come back down into a trading time frame as we get into this. We'll see where this market opens. But right now, I've got an area of interest, GBPUSD. Drop in your bid zones here, 25.20 to 25.50. And then the offer zone comes in 26.60 to 26.80. Okay, EURUSD. This thing's been rolling sideways. We absolutely crushed it in the sideways channel back here. Then we had the drive to a new structure high. We had the 114s in there for the sell. Issued the buy signals on the retracement. We had the 382 fib at previous structure resistance, now anticipated support. And so now we're just rolling sideways. So the buy signal here, winner, trail stop out. Buy signal here, winner. And that one's still long, looking for the extended move. Right now our bid zones are 112 handle up to the 114. We're in a 200 pip sideways trade with a bullish bias based on this impulse move here, followed by this retracement back to this level right here. All right, so USDJPY. US yen right here, not a lot going on. We finally took out our 107.30 support zone right here. We drove to a new structure low. Let's go ahead and knock out fibs. We had a 4-hour swing high down to this new structure low. And you'll note right there that we've got a 382 Fibonacci retracement. I prefer the rally back into the 618. Let's come down to a 1-hour time frame. Right here. Now what we'll do is we'll take a look at a potential rally back into this key price point. So let's go here, draw in our support zones. Again, it gets a little mushy. You see right here, we came down, we barely broke below and closed below this previous double bottom. So I called this a sell signal, but I did call it aggressive because I wasn't real excited about the lack of conviction of taking out those structure support zones. However, it did work out nicely. Rolled over, we dropped down to new structure lows. Now again, we've got a double bottom here, which is pretty common for reversal zones. Now let's see if we pop back up. The 382 sell here for me is aggressive. So again, an area of interest will be back into that support. Once broken, anticipated resistance. It's already produced a nice level. We have a confluence point here with our 4-hour 618. That's the 107.30 to 107.40 level US yen. Okay, back out to the 4-hour time frame. Let's go to the US Canada. Again, not a lot going on right here. These support zones we had in from 2 weeks ago held. I issued the buy signal at the 135 handle. Y'all jumped on that, participated back to the 136. I'm going to pull this one down slightly. So 136.80 to 137.10 is a 30 pip window up here. And then right now you'll see that on the 1-hour chart to 2-hour chart, we've got this 100 pip bid offer zone, and it's just been rolling sideways inside of that. So we got the qualified sell here, we got the qualified buy here, we got the qualified sell here. So again, gang, we kind of jokingly call this a game of Pong, like back in the day with Atari. We identify our key zones, we let price tell us where it's headed, and the DSR system will literally produce 70 to 85% win rates in these channels. This is very, very common. We get the sell signal here, we go 1-0. Sell signal here, 2-0. Buy signal here, 3-0. Sell signal here, it looks like we're going to go hit 4-0. The scalper target, if that's attained, stops will come to break even or better, but it will eventually break out. We'll either break above here and take a loss. So if we go 3 wins, 1 loss, then that's 75% accurate inside of these clearly defined channels. If we roll back over here and we have the 4th winner and then buy it down here, again, remember, you have to have a qualified signal. So be sure to follow your rules, but then we'd be 4 winners and 1 loser, and that'd be 80% accurate in those channels. And then when markets do break down, which they obviously always will, we take that 1 loss and now we change our thought process. We're dynamic in our thought process and in our rules base, and now we start to look for a directional move, a trend trade, and we come back in and rely a little more heavily on the trend signal down here. Okay, USDCHF. We broke out of this zone here. We drove to the new structure lows. So again, when that happened on the breakout, let's go ahead and just move this up. The common thing to do is run your fibs. Here's the breakdown, break below, close below to the new structure low. Look left, grab your sore thumb high, fib it down to here, and then we look for a pullback, and there's always going to be a point of confluence. You'll see that low-to-low trend line extension meets the high-to-high trend extension right there. We popped right back up. The 382 fib was right at that level. And now we go new structure low, lower high, followed by the lower high here. We go new structure low, lower close, followed by the lower high here. New structure low, lower high. Lower close, followed by the lower high here. Now here's what's interesting. Watch the fibs at work right here in each of these subsequent moves. So from here, price drove to this new structure low and rallied right back to the 618,786 and then reversed. From the new structure low here, look left. Where did we start? Left click at your swing high, drop down here. Price rallied back to the 618,786. And now we tried to follow through here. So current got swing resistance 94.40 to 94.60. Current. And again, I'm not going to call this a bid zone. We don't have multiple tests at that level. However, if we do pull back up here, 94.40 to 60, it's likely we'll get a 1-hour qualified trade there. So watch that level. And any shorts against this area, 440 to 460, are going to be with the underlying trend. Okay, now let's go look at New Zealand real quickly. Again, we had a beautiful 4-hour winner there. Again, same exact trade that we saw. You'll recognize this price action from the earlier view that we had of the EURUSD. We drove to a new structure high, higher close, pulled right back down. Previous resistance, once broken, anticipated support. 382 Fibonacci retracement, SOS1. Build your strength of signal based on your rules. Put in a double bottom. Winner, winner, chicken dinner. Pops up right here. Get your 40 to 60 pips. Pulls back, add your scalper back in, 40 to 60 pips. Pulls back, add your scalper back in, 40 to 60 pips. And then finally we pop back up here. So remember, gang, when we're buyers at this level in New Zealand, we're trading with the underlying trend. Back here is your clue. This signals to you we just made a new structure high, higher close. We anticipate the higher low in a bull continuation pattern. New Zealand, USD. And then Aussie USD, same visual price pattern, highly correlated, and obviously same exact thing. All right, so that'll prepare you for the upcoming week. Hope that helped. Welcome to all of our new members. We appreciate you. All of our new DSR owners and SR specialist traders. Continue to follow your rules of engagement. We'll see you through the week in the updates.